Hey, good morning, stock investors, and welcome to the week. We have 2 more days in September to trade, and then we're on to October. So we're going to have Monday, Tuesday, and then we put September in the books and start a new month for October. So far, the month's been a real good one, and most of the month we've been in a rally, not a overly aggressive rally, but for the most part, a pretty good rally. And in this live stream, we're going to be looking primarily at stocks, seeing which stocks look interesting to us, but we'd love to take a look at some stocks that are interesting to you. And with me is my colleague, Daryl. How you doing, Daryl?
Doing fantastic, Victor. Good to see you. Thank you for having me, and good morning, good afternoon to everyone.
Yeah, it's great to see you, Daryl. I've got a couple of stocks that I want to look at and would love to see your analysis on the charts. What we'll do, I think you guys know the format. We're going to look at fundamentals of companies, see what's driving their success or failure, see what their fundamentals look like, and then Daryl looks at charts. And I think it's a really good combination. Looks like blocks for fun. Good morning. Looks like you're interested in NVO, and we can take a look at NVO. We'll put that on the list. NVO is trading down this morning. I noticed it this morning, and it seems that they had got a downgrade. And I think that government shutdown is also weighing on pharmaceutical companies. So we'll take a look at NVO. Just a quick review of where we're at. The last week, stocks, some big names really took a step back last week. Amazon, Google, Meta, Broadcom, Arista Networks, Oracle. So Lilly took a step back, and Apple had a decent week. I think they had the big phone launch, right?
Yep.
Yep.
And it seems like the demand is a little better than what they were expecting.
I see the commercials, and man, they're a big marketing machine. So we'll see how that goes for Apple. It's not a high performing stock in 2025, but I think for a while it looked terrible, and now it looks not too bad. It's doing okay. The energy space caught a nice little rally last week. Oil prices were moving higher, and looks like it was a nice green area last week. So we'll see how the market trades today. I think earlier, I should say, is the market was looking, man, it's gotten better. The futures, NASDAQ's going to open up 0.73% higher. The S&P 0.55% higher. So that's a pretty positive open if it ends up being that. So we'll monitor that through the live stream. There was one company that announced earnings today, and that's Carnival. So we'll take a look at that later, but maybe we can get things started with the request, which was NVO. And let me open up NVO. I'm very familiar with NVO. I own NVO stock. I've been a little surprised as to how negative the market has been with this stock. It's taken the stock down 56% over 1 year. And it's created, I don't know if it's going to be an opportunity, but look at that. It's like a third grader drew a mountain. It went up and it came down. It peaked in the middle of 2024. The weight loss success that it's had with Ozempic, and then the big sell-off of that business being under threat from compounders, and in general, like the healthcare space has been under pressure, and it's sold off this stock. This stock is discounted. I take a conservative approach, and I'll show you my valuation in a few minutes. For now, this is a big cap, $242 billion of market cap, but they have big revenue, $49 billion of revenue. P ratio looks looks reasonable, and analysts think it's heavily discounted. One of the things that is good about Novo Nordisk is the growth rate. This is a big business, and it's growing at a very good rate. Now, bears are saying, well, it's going to stop because the weight loss categories seeing more and more competition. There's government pushback on the cost. There's compounders that are eating away at their market share. All those things are forces that are causing the stock to sell off. But the data on their income statement shows that they continue to grow at a very good rate, and they're very, very profitable. They have terrific gross margins, terrific profit margins, and very good free cash flow margins. So they are just making their balance sheet better and better and better. So it's one of those stocks that is, I shake my head and go, man, what is the market looking for? It's growing really well. It's very big. It's very profitable, but it's just the story around it is negative. And optimistic analysts think that it's worth a lot more, like literally close to 3 times its current stock price. And the most bearish analyst believes it's a $47 stock, which isn't too much downside risk. From 55 to 47, we're pretty much there. And especially today, right? It's down to 53. So, man, this stock, it could be, something that really works, but I haven't seen the sentiment move to being more positive. If anything, just neutral. It just continues to be stuck in the mud. The revenue growth, and I think they're going to grow better than 9.78% this year. But over time, this is good growth. For a company their size, that's very good growth. And their PE ratio is looking really ridiculous. For a growing, profitable company, this is a good PE. So I think Novo Nordisk at some point is going to reward investors. I just don't know if it's going to be in a quarter, in a year, but at some point, these fundamentals are just too valuable. And, when I turn it over to you, I'm going to research to see which famous super investors are in Novo Nordisk, see if any new investors are buying into it.
Okay.
That'll be interesting. So let me show my valuation on Novo. Actually, let me turn it over to you, and then I'm going to get my valuation ready and research the super investors.
Okay. So we've looked at Novo Nordisk several times over the last month or so, and I saved a chart that we created maybe a month or so ago, 3 weeks, but it has this is a 1-year daily price chart, and we've drawn some longer term trend lines, this upper blue dotted line, and then we have a shorter term trend, which is connecting the highs from June and July. These shorter term trends are a little less powerful for long time views on sentiment shift, but I still like to use them because that would be my initial point where I would start looking at and verifying that sentiment is changing. So we can see that they did break above that shorter term trend on the 18th of September, but they quickly rolled back over and are now trading below that trend line. And that's a upward sloping 20-day. They are below that. They are below barely, except after they open, if the pre-market trading holds, they're going to definitely be below a downward sloping 50-day. And the 200-day also confirms that we're in a confirmed downtrend. They were extremely oversold at the beginning of August, end of July. And then they recovered to about the midpoint on the RSI. They got close to being overbought, but not quite into overbought territory. And they've come back down now to an RSI of 45.37. The PPO is upward sloping and in positive territory, but I can see we're going to have a bearish crossover in bullish territory this morning. One of the things that I notice is they've had a volume shift to the upside. So since about the end of July, we can see that the 50-day moving average, which is that blue line that runs across these volume bars, that has definitely shifted higher by the average volume. 50-day average volume was sitting at about 19 million shares per day, 20 million. And we have shifted up. Let me see here. 13 million. So let's go 13.5 million. And it is shifted up to about 20 million. So the average daily volume has increased. It's been a level shift. Unfortunately, that's been to the downside. So I can see by these volume price bars that it's been mostly sellers. We did have a big bunch of buyers in the price range from 68 down to about 62. But other than that, most of this has been selling volume. I can also see that in the accumulation distribution. You can see that shift down, and it is in distribution mode at the moment. We can see that from the money flow as well. This was pretty big downdraft here in money flow.
Wow.
We have come back positive. We're kind of in no man's land today. Last week we were in bullish territory, but you can tell that the volume in that money flow is not near as intense as this selling pressure here.
I have a question.
Okay.
So a stock like this that is definitely sold off.
Yep.
Is there a theory or thesis that gets established where it's so oversold, the only direction it has is up because it's not going to go to zero?
Right.
So that's the question: is at a certain point where it's so oversold, does a theory get kind of set up where, hey, this thing's going to trade up because it couldn't go any further down?
It looks like it's actually sitting at a pretty good support line right here. So it met some resistance at this 56 price, and it looks like it's going to act as support. It did not do that in August, so it actually broke down below that support level. So I don't know if there's any theories, but I'm going to go back to something you said a little earlier. I think your downside risk is probably much smaller than your upside reward at this point.
Mm-hmm.
I would continue to play it very safe until you see it break above these trend lines. We'd have to get above this upward upside trend line for it to stop having lower highs.
Mm-hmm.
So if it cannot stop doing that, then there is still some risk to the downside. But once it gets above this trend line, I think that reward to risk would play in your favor.
Okay. Interesting. Let me show a few things. So starting with famous super investors in Novo Nordisk, there's a very credible name in his Chase Coleman. He's doing really well. He's very, very good. I would say most of his portfolio is in technology, communication services, where the market's been thriving, and he's in Novo Nordisk. And so are 4 others. It's not held by like 20 of them, but it's a pretty good number. And he's got a pretty good position, $87 million. And then Thomas Geiner has 155 million. And these two investors bought additional shares. One investor, Poland Capital, reduced substantially. So there are some, big investors buying into the stock. I have the stock discounted by 38% if I look at the value of this business based on their cash flows and looking at their earnings per share. So it's definitely a discounted stock. When the market's going to have an appetite to buy this company, couldn't tell you. But based on where the stock's trading, I have to think that it can't go much further down because these are dollars and cents, right? At the end of the day, whether they are a pharmaceutical company or they make movies and people stream them online, or they're selling, mobile phones, these are dollars and cents. So at some point, the market just says, "Hey, I don't care what they do. The dollars and cents are adding up to a big number, and I'm very interested." They pay a dividend. It's not the biggest dividend we've ever seen, and we'll see what the company does. I think they're fending off the compounders, trying to get them to stop making competitive alternatives to their weight loss. From what I read, their weight loss drug is a little better than Eli Lilly's. Eli Lilly's is good, but not as good as Ozempic. And we'll see how things trade. So those are the comments on Novo Nordisk. So we've got another request, and the request is to look at ODD, which I believe is Oddity. And Oddity is Oddity Tech operates as a consumer tech company that builds digital-first brands for beauty, wellness industries in the United States and internationally. It serves consumers through its AI-driven online platform, which uses data science, machine learning, and computer vision capabilities to identify consumer needs and develop solutions in the form of beauty, wellness, and technology. So just take a peek at their website. And I think the experience you have on Oddity is you can upload your image, and then you could start, working with its technology to maybe find, products that really match your complexion, all that stuff. I'm not an expert on beauty, so I'll leave it to the experts on beauty to talk about this. But from a technology perspective, that's what they do. So it is interesting. it makes sense. We're in a day and age when we have AI and we've got platforms to do all kinds of things. Year to date, this one has had a very good 2025. It's up 45%. Over the 1 year, it's up almost 65%. 5 year, that's okay, but it's not great. And wait, I guess they IPO'd less than 5 years ago. They IPO'd 2 years ago. So over 2 years, they're up 74%. That's very good. I'm glad I clarified that. The 1 year, 65% is very good. They're still a very small cap, 3.4 billion. Revenues of 751 million. Their P ratio is in the mid 30s, and analysts still think it's a good buy. The company is growing 26% on a revenue number that's 751 million. And their cash flow looks good. They've been growing it. They're a young company, but they've been growing it nicely. And their gross margins are good, 73%. Profit margins are decent. So it looks like a good business. They got to keep growing. You don't grow, your stock isn't going anywhere. But 26% isn't bad. If I look at the quarterly, that looks good. Nice and consistent growth on the quarterly. And looking at the forecast, what are analysts thinking? 11 analysts are covering this stock, and they put price targets out there from $90 down to $50. So there's still some upside, according to some analysts. The forecast for revenue looks like revenue is supposed to keep growing at a really nice rate. That looks good. That growth rate looks really good. And their profitability is going to expand. Looks very good. Okay, so that's Oddity. Got a valuation. Did you want to show the charts, and then I go to the valuation?
Either way, whatever you want to do.
All right, let me take a peek at their valuation, then we'll go over the charts. Okay, so Oddity is discounted by 39%. They have very good growth, and they're already generating free cash flow. They're profitable. The longer term growth rate is expected to continue to go higher. I don't own any shares in Oddity. It's not a category where I'm like very comfortable and therefore have a lot of conviction, because I don't know beauty. It's like, I know that beauty is important, especially to ladies, of course. I just don't get it. Like, they pay certain prices, and I think there's certain drivers of why one cosmetics company can charge, let's say, $200 for a product, and then a product in the same type of product from a lesser appreciated brand is $20. I just don't understand the difference. But Oddity is discounted if I just look at the numbers and I look at the growth rates. So it's an opportunity for those that are comfortable with Oddity, and we'll see how it trades. Speaking of which, why don't I turn it over to you?
Well, the interesting thing is they're in personal products industry in the consumer staples sector. And consumer staples has been an underperformer this year, but this company is basically an outperformer. So we did have this price shift. It had been trading pretty much sideways for months, and then all of a sudden we had a big shift in the price level. It has decreased and is in a consolidation pattern at the moment. So from an outperformance in the consumer staples sector, that looks pretty positive. Like we saw in Novo, we are seeing a shift in the volume, at least May through about the middle of July, and then it has shifted back down. The volume has gotten much lighter here as it's consolidating. We have been in the bearish part of the RSI, under 50, above 30. It is improving slightly, but still in bearish territory. The PPO is negative, and it looks like if they can continue their upward price momentum that we see in the last couple of days, that they could have a bullish crossover in bearish territory. We also see that the accumulation jumped up pretty significantly at the end of April, beginning of May, and has stayed fairly consistent across that time. Most of the money flow was in May, with a pretty sizable amount of money flowing into the stock. They have outperformed the S&P 500 by 36% over the last year. They've outperformed the consumer staples by 63.5%. The personal products industry, they have outperformed that by 102%, and that industry overall has underperformed the S&P 500. So while the industry is weak, this particular company is showing a lot of strength and has basically outperformed in its category in the market overall. Got an upward sloping 200. Looks like the 20-day is rolled over here and is starting to decline, and the 50-day is currently declining. One thing I always like to do is draw somewhat of a trend chart just to give me an idea of where I would like to see it get to reverse this downtrend that it's been in since July, where it peaked out.
So you want it to get above that line, and then you would feel like, hey, it's moving higher.
Yeah, it needs to break that downtrend. It's currently in a downtrend. The 200-day isn't confirming that yet, because that's still moving up. So it could find some support here at the 200-day, but I would like to see it find support and then start reversing its price performance and get above that trend line that I had on there. And by the way, we looked at FactSet expectations by sector for the next year.
Right.
And consumer staples, I think, is number 2 after healthcare for the next year. So this might be a good place to be if FactSet is correct in their price expectations for consumer staples next year.
Yep. Yeah, interesting stock. They announced on November 5th, so we're about a month and a week away from their earnings. Certainly earnings could move this stock higher or lower. We'll see what they announce. So that's Oddity. All right, so let's talk about Chevron, and I think we wanted to talk about Hess Midstream. And these are two stocks that are in the energy space. Chevron being a fully integrated energy company that has the ability to explore for oil and natural gas, the refining capacity, and then downstream distribution ability. So these guys they're having a decent year. And they had that big sell-off, right, where we had the tariff. Well, actually, during tariffs, this rallied, and then it sold off quite drastically. But since then, it's been moving up higher, and it pays a nice dividend of 4%, 4.27. Big cap, 325 billion. P ratios in today's expensive market look okay. And I'm going to call them fairly priced according to what analysts are seeing. This past week has been, I think, a good one for them. It's been good there. It's been good there. And the market's open. These guys are trading lower. So big energy companies, they're all dependent on, well, I think the Hess Midstream is going to be different because they're a midstream pipeline operator. So they're not affected by the price of oil per barrel, but Chevron is, or natural gas prices. And that's what moves their revenue line higher or lower. When the oil price is higher, it really moves higher. And they make a lot of money. They are very profitable. This industry has been around for more than 100 years. So they know how to extract efficiently, process, put it in refineries, make it into a usable product, and then sell it. So a very, very mature industry. But when oil prices go down, these guys, their revenues go down. Their profits are good, cash flows are good, balance sheets are good. So Chevron's a pretty decent play on, it's an expensive market where tech, communication services, even financials have gotten pretty pricey. And Chevron's in my portfolio. I keep it there because it's interesting whenever we have like a recession or a market sell-off, oil companies tend to do well. And I don't have like a real good cause and effect kind of explanation as to why. But in 2022, Chevron did great. Well, in 2022, most every technology stock was selling off big time. So it was like, head scratcher. Like in my portfolio back then, my number one performer, Chevron. I'm like, man, whenever the chips are down elsewhere, oil companies look good. And right now, my observation high level is the stock market's expensive. Technology stocks are expensive. The AI build out is incredible. If we have a pause in that build out, maybe we have a big sell off in tech, communication services, and financials. And I think Chevron could stand up tall. So that is Chevron. I don't have a valuation on Hess, but maybe I can turn it over to you and we can get into Chevron and Hess, and then I'll try to work on something for Hess.
Okay. Let's first look at this fact set, what they're expecting over the next year. Energy, they're expecting to be the number one sector. Energy was the number one sector last week, but this is looking out 12 months. I mentioned consumer staples. For the last company, they're expected to rise 4.6% next year. Real estate is next at 13.9%. So energy is expected to perform best next year. We're looking at Chevron now, the 1-year daily price chart, and they took a hit in April, like all other companies. And since that time, they've actually been on a pretty good run. So here we're seeing higher highs as we go through this. So that's definitely an upward price trend. They are trading above a barely declining 20-day, an upward sloping 50-day, and an upward sloping 200-day. Their RSI is sitting right at the midpoint. PPO is in bullish territory. Accumulation peaked out at the beginning of September and has declined slightly for the rest of the month. Money flow is currently negative. And the reason that we mentioned Hess Midstream, so Chevron bought Hess Corporation. They just closed on that deal. Hess Midstream was spun out of Hess in 2015 in a joint venture. So Hess Midstream is a separately traded company. But Chevron now owns Hess, which was sponsoring this company with about a 38% stake, which Chevron now owns. And this company is primarily focused in the Bakken region in North Dakota. The news here on September the 10th was a downgrade by an analyst from UBS who had some risk that Chevron could potentially reduce one of their rigs in that Bakken region. They had 4, and they could decrease the number of rigs that they had operating in that area. So they got a downgrade. This is Hess now we're looking at.
Mm-hmm.
And then on September the 19th, it was confirmed by Hess themselves that Chevron had indeed decreased the rig count from 4 to 3. So they took a big price hit, about 10%. But when I have the Bollinger Bands on here, these 3 days actually fell out of the Bollinger Bands, which told me it exceeded the standard movement we would see in a 2 standard deviation over 20 days. So I actually bought on this date. On the 11th, it had reached my sell point, so I actually trimmed about 16% of my holdings. Then I bought back about 10% at this price, and I bought back 8% or added 8% on the 25th. So this is starting to base right here. I think this is a really good basing pattern. It's very short. It's only a week long. But if I step out to 3 years and I just set my crosshairs at that point, you can see that it was resistance at this price in July of last year, August of last year, September of last year. Then it crossed over and became a support line. And then it ran up and it acted as support again in April. And I think it's going to provide good support now. I don't expect it to fall much more than where we're sitting right now, maybe $1 or $2. And I think the upside target is closer to around $39. So I'm going to be adding to my position in Hess in this price range. This is an income play. I don't make a recommendation for anyone else. This is strictly an income play.
And just a quick question on Chevron reducing the rig count and so forth. Is Hess able to look at another oil producer and say, hey, we have capacity. Would you like to use it?
They are very Chevron is their biggest customer there. They do have some third parties that use those pipelines. But an interesting thing that the chief operating officer said is that the efficiency of their drilling isn't necessarily dependent upon the number of rigs. It is the efficiency of the rigs they have in place. And I'm doing a whole video on this. So if you're interested in Hess Midstream, be on the lookout for a video today or tomorrow where I'm going to go into a lot of detail on this.
Awesome.
But they had 8 rigs in 2015. They dropped to 2.5 rigs, and then they went back up to 6. And then for the last 3 years, they've had 4, and now they're going to 3. if you look at the amount of oil and gas that flow through their pipelines, it has increased nearly every single year.
Interesting.
So I don't see a direct, there is obviously a tie between the number of rigs and your profits, but it's not a one-to-one correlation in my opinion. And that was confirmed by the COO. And if you look at their EBITDA per year, they have increased it nearly every single year since they IPO'd in 2017, despite the rig counts being cut more than in half at some points, and their EBITDA still goes up. So they've done a very good job of managing their throughput and profitability. I think this was an overreaction, and I based that on the Bollinger Bands. They're still within their guidance for the end of this year. They did move their guidance to the lower half of their 2025 guidance, but this one rig reduction is not going to affect their guidance for the year, even though it put it in the lower half of the guidance. So anyway, I'll have a lot more detail in my video that I'll get out today or tomorrow.
Excellent.
And they do pay a 8.17% dividend yield at the moment. And even though they dropped this rig count, their capital plan and distribution, they're still expected to raise their distribution 5% per year for the next 3 years.
Excellent. So let me show some fundamentals and then my valuation of Hess. So first off, the 5-year looks great for Hess. If you bought the stock way back here, you're up 129%. You've been paid a lot of income. What else could an investor want? That's a pretty good situation. More recently, we have had a sell-off. It's it's driven from the rig count story and so forth. So not completely irrational. Market cap 7.3 billion, revenue 1.5 billion, and the PE looks pretty reasonable. As mentioned by Daryl, they pay a really nice dividend, and analysts think it's discounted. What's interesting is these guys, I showed Chevron earlier in the stream, and you saw how Chevron gets impacted by the price of oil. If the price of oil goes up, Chevron's super happy. They're making lots of money. Oil prices drop. Their revenues go down. But Hess, they're getting paid to move the oil or the natural gas. And it's interesting to see that their revenues have expanded every year for the last 7 years. Very good. That's very good. Their profitability is there. The free cash flow is there. And let's take a look at the forecast. What are analysts saying? We've got 7 analysts to cover the stock. And one analyst has a price target of 48. Another analyst at 37. So they're all saying it's discounted. So all of them are saying, hey, the stock's priced lower than it should be.
I'm at about 39, so I'll be interested to see your valuation as well.
Okay. Now, if we look at a forecast, 9 analysts are participating in it, and consensus-wise, they're expecting they're going to continue to grow. This year, they're going to grow by 14%, next year by 10%, and then 7%. Those are good growth numbers. So profits are going to expand. So that looks really good.
When you're talking about the price of oil, Hess Midstream has minimum volume commitments, and that helps dampen the effect of oil pricing itself.
Okay, so we've got, I think, positive fundamental information. Let me look at their balance sheet. So we have debt of 3.7 billion, just very little cash. And if we look at debt to EBITDA, they're right there at the maximum 3. So they own some pretty big assets. So I understand the debt. Their dividend is high, but these players, the midstream, companies, they pay a higher dividend to attract investors. But maybe they could get that debt level down a bit, because at 3.15, if it got any higher, it'd be uncomfortable, and it'd be good for them to lower their debt. Interest rates are going down, so I wouldn't. This isn't like a showstopper for me, but it's just at the maximum. All right, so when I valued the company, I think they're at a 29% discount. Their stock is worth $48.85. It is trading on the stock market for $34.60. Given that it has a high dividend and that it, and I'm going to change this from a 9 to a 9.5 based on that balance sheet. It's still discounted. So to the right investor that's looking for income, not a bad idea. Not a bad idea. I don't invest in the midstream players a whole lot. I maybe it's because my first job out of college, I went to work for a oil company. It was a pretty big one. They have since been acquired by Chevron. And I guess the oil business, the most exciting part is exploration. So I'm in Occidental, I'm in Chevron, and that's where fortunes are made or lost. So I guess I like that part of the energy complex, and we'll continue to invest in that area. The midstream players are interesting as well for income investors. It's a really good idea, because you're going to need the oil or you're going to need the natural gas. I know that you and I were talking before we started to stream. You have the AI data centers that are being built, and they're going to need a lot of power. And the majority of electricity production in the U.S. is created by natural gas as fuel, 60%. Well, if you're going to increase the electricity demand at data centers, first, you can flow natural gas, and they're building these data centers right next to the natural gas infrastructure. That's why Texas is getting these data centers that are massive. You're seeing these data centers be built around these transmission lines. I'm putting together some research on understanding, is natural gas going to see a lot more demand because of the data centers? If it does, the whole space is going to benefit. Hess Midstream is going to transmit that natural gas, and it's going to transmit more of it. They're going to make more money, as well as the oil companies or the energy companies are going to make more money because they're like, cool, we're going to charge more for natural gas. There's higher demand. So I'm keeping my eye on that. And I think energy is not a bad sector to keep an eye on and do some research, because the technology space has done great. Communication services, awesome. It's driven the great returns I have in 2025, had in 24, had in 23. But it's getting a little old and very expensive. And at some point, I think there's going to be a pretty solid pullback in tech and communication services. It'll be good to be elsewhere and move some capital over to energy. So thanks for the analysis on Hess as well as Chevron. We covered Novo Nordisk. We've covered Hess. Can we, since we're in the neighborhood, can we cover Occidental?
Yeah, let's take a look at that.
This is Warren Buffett's. Warren Buffett owns Chevron and he owns Occidental. But back in 2021, 2022, Occidental looked like, a genius move, another genius move from Warren Buffett. And he bought into Occidental big time, like $10 a share. And then the shares went up to $74. So we all know Warren Buffett's a savant when it comes to investing. But on this occasion, it was just a quick reminder, hey, stock market, this is why Warren Buffett's so good. And since then, right, oil prices didn't continue to rise. They actually went down. So Occidental hasn't flourished over the last year. It's down 5.41. It pays less than a 2% dividend. $47 billion market cap. And I showed Chevron as hundreds of billions of dollars market cap. And these guys are an exploration company. They're trying to they've already found places where they're extracting a lot of oil and natural gas, and they're constantly trying to better, where they should be extracting oil. And they're very good at it. And these guys have a PE for the current year of 28, forward P of 19. Their financials, you're going to see that oil price really show up. Now, there's a part of me that has, tracks oil price. And I would say that right now, oil price is lower than it should be historically. I think if we're around $70 to $75 per barrel, we're probably at a place that's, I would say, the equilibrium, or that's where I would think is the midpoint. And if you're above that, we're in a really high oil price market, and oil companies are making a lot of money. So the oil price is like $64, $63 per barrel. And I think it could move higher. With that sense, Oxy's not a bad play for me. It's a stock that I've been buying shares into. And I'm actually looking for one more energy company. I own a good portion of Chevron, but the small caps this year have been doing so well that I'd like to find a smaller energy company that could be added to my portfolio in addition to Oxy. Oxy this year, with oil prices going up a little bit, it has helped with their revenues. They've expanded a little bit, so that's good. Let's see where their profitability is at. So free cash flow, these guys are a cash flow machine. They just extract oil, get it to market, turn it into cash. Margins are good. So when things work for this business, man, do they work. And then the forecast, let's see what the analysts are saying. So we've got 20 analysts covering it. And we've got the most optimistic analysts at 64, the most pessimistic ones at 44. So, and collectively, consensus, stocks discounted by 7.7%. This forecast, small growth. So that's not bad. I think it could be better if oil prices move higher. And the profitability, look at that profitability growth. Looks really good. So that looks really good. All right. So that's Oxy. And let me show my valuation, and then I'll turn it over to you, sir, for charts. I think Oxy provides a nice discount of 40%. They just keep cranking out cash, and their profitability is really going up. So I'm going to keep buying Oxy stock. I own not a starter position. I own a good number of Oxy shares, and I'd like to own some more shares. So that is Oxy. Can you show the charts on Occidental?
Yeah, it looks pretty similar to Chevron, actually. So they took the big hit in April, like everybody, and they've been steadily climbing back up. So they got as low as $34 a share in April, and they're trading up 1.5%, 1.6% today with a shooting star candle. Their 200-day has been on a decline for quite some time. It is starting to roll to the upside. So I think that is pretty supportive of increased pricing on Occidental. The 50-day also just crossed above the 200-day. So that's another positive sign. It's not anywhere close to being overbought. So it's pretty new in this most recent price action. It has been under distribution for the past year. The money flow was positive in September, is kind of in no man's land at the moment. So we'll see how that works out. But it looks like it's a pretty good time for Occidental moving forward. And keep in mind, according to FactSet, energy is supposedly expected to be the best performing sector next year for the next 12 months.
Yeah. And the stock today is moving higher on news that the Occidental is looking to sell their chemical business. And, as I learned when I worked for an oil company, a lot of natural gas gets turned into fertilizers that go into the agriculture business. It's a big part of the natural gas business. And Oxy may be wanting to sell that off and say, hey, we don't want to be in that business anymore. We want to be a pure play, oil and natural gas producer, and then sell that commodity because then they don't have to process and sell the ag product. So that's what's moving the stock higher. They'll probably get some capital back. One thing I forgot to show is the balance sheet on Oxy. Let me show that. It's always important to look at balance sheets because you just don't want to buy a company with a bunch of debt. These guys have $24 billion of debt, $2 billion of cash. So net a little under 22. And look at this debt to EBITDA, 1.71 is fine. They're well below that 3. So balance sheet's good. I think it'll be interesting to see Oxy, how it trades going forward. So we covered Occidental, and I think Mike is on, and he's seeing that Upstart is down. Looks like down 4%. That's a pretty good pullback. The stock hasn't been doing great this year. It's had its moments. This is a small cap. I think this is a buy now, pay later company, right? Yeah. No, personal lending, auto lending, and other. So they do personal lending. Okay. All right. So it's not a pure play buy now, pay later. And they're a small cap, 5.3 billion, revenues of 884 million, forward P 27. What's the 1 year look like? 1 year looks great. 5 year looks good. Although it had this big run up in 2021 and it sold off, but the 1 year looks pretty good. If you bought at the right times, you're doing just fine with this stock. Growth looks great, 53% growth. Wow, look at that last quarter. They grew at 90%.
Oh.
So the growth is there for Upstart. It's interesting that the stock isn't really moving fast in 2025. And these guys are doing lending. I'm not sure how I would treat these guys, if I would treat them like a bank or if I would treat them like a transaction-based financial services company like a Robinhood, PayPal. I'd have to look at them closely. Analysts, 14 of them cover Upstart. And boy, you got a range on this one. You have one analyst that's way down at $16.50. You have another analyst that's way up there at $108 per share. So there is a disagreement among the analysts. On average, the consensus is that it's discounted by 33%. And they're expected to keep growing. That's good growth. And earnings, profits are going to grow nicely. So that looks really good. Yeah, looks good. Can you look at the charts on Upstart?
Sure. Okay. So it looks like the moving averages are all on the decline at the moment. So you can start drawing the trend lines across there in your mind. You've seen me draw them so many times. It gives you an idea of what I'd like to see as far as a reversal of a downtrend. Their RSI is getting pretty close to being oversold. PPO is in bearish territory. They're in distribution at the moment. Money flow's been more negative than positive over the last 2 months. So, I don't know, not much else to say here for me.
Right. Yeah, I think Upstart has some good fundamentals. It's kind of a unique business, right? It's kind of in a new category of this personal lending. So it'll be interesting to watch. The other stock that is on the move is Instacart. And Instacart's just been caught in this ugly sell cycle. It's news that Amazon is moving into the grocery delivery space is really scaring investors in Instacart, and they're shying away from buying Instacart. Instacart announces on November 11th, so we'll see how their growth goes, if they're going to continue to grow at a very good rate or if they're really seeing that competition from Amazon take away revenue. Instacart's revenue growth is good. It's not fantastic. 10% is not in the fantastic category. It's in the good category. They're pretty good size, 3.5. And they have very good profitability, very good margins, very good free cash flow. But the whole story that Amazon's moving into their space is scaring investors. Analysts think it's discounted substantially, 39% discount. I think they're discounted. And I think the story is probably being over. It's too concerning. It shouldn't be that much of a concern. I'm an Amazon stockholder. I own a lot of Amazon. I think Amazon's great, but it's food delivery, right? Excuse me, it's grocery. And I don't think Amazon grocery has been a huge success. Amazon's been a huge success in, merchandise, e-commerce. The streaming has been good. The data center, cloud services has been fantastic, just phenomenal. But they acquired Whole Foods, 15 years ago, 20 years ago? And I don't know that they can claim that has been a big success. I've been to Whole Foods, and it's interesting, but I'd rather go to Costco, and for me, Kroger, Ralph's. That's where we find the foods that we want to eat, a better variety. And Whole Foods, kind of a different kind of different catalog of foods that you can buy there. Some things look really neat there, but I don't think they can claim Amazon that it's been a huge success. So are they going to be a huge success in delivering food from either their Amazon Whole Foods or Amazon Fresh grocery stores? I don't think so. I think the historically successful grocery stores like Kroger are gonna continue to be successful, and so is Costco. Costco is going to use Instacart for a lot of their deliveries. Well, if I was going to bet, who am I betting on? In this particular space, I'm betting on Instacart, who's partnered with like the Krogers and the Costcos, and love Amazon because of their data center business and their e-commerce business for merchandise. And I like their streaming business, but I don't think they're going to do great in grocery. They haven't done great over the last 15 years. Instacart is discounted, in my opinion. I continue to buy shares of Instacart. And I know I've got it in here. There we go. See, because I don't have Instacart. It's Maple Bear. Now, this is a funky name, but oh well. The founder gets to name his company the way he wants to name it. 58% discount. That's a high discount. Now, the important performance indicator for Maple Bear is growth. If they come out, I think they're going to announce November 11th. So we're about a month and a half away. They come out and put up a 11% growth number for the quarter. I'm going to keep buying shares. I'm going to be like, yeah, the story is fiction that Amazon's going to disrupt these guys because they continue to grow. If their growth goes down to like 5%, man, it's going to be a bloodbath for the stock. So we'll see which one we get. But the stock price is in Maple Bear's hands. If you guys grow, we're good. You don't grow, it's really bad, because the market's going to have evidence that, hey, the story that Amazon's going to disrupt you is true. So that is Maple Bear. What are the charts telling you on Maple Bear?
This is one that I bought into as well. I'm underwater at the moment. Looks like they are down almost 5% this morning with a hammer candle. We look at the hammer candles in previous days, you can see that it does price reverse and move a little bit higher. So this may be a overdone reaction, and we might see some price increases here in the next couple of days. They are getting very close to being oversold. So their RSI is at 31. Their PPO is negative. And it looks like today the difference between the 12 and 26-day moving averages is actually increasing. Their accumulation has been really good over the past year. And we did have the drop off on the Amazon announcement. I think they announced their first one here, and then they announced a partnership with a grocer, and that caused another decline. But the accumulation stayed pretty flat, but we have dropped off this past month, and the money flow is negative at the moment. But I'm kind of with you. I'm gonna continue holding this one and add to it if I can see this downtrend reverse. And we'll see what happens at the next earnings call.
Yep. So Let me check in with where the market's trading this morning. And we're going to look at Clear Secure, symbol YOU. And let's see here. So what stocks are working? Which stocks are not working? Boy, look at Google. They got up and ready to hit the week. Look at NVIDIA. Wow. Looks good, NVIDIA. AMD, Micron. Got a lot of green down here. Got Uber up, ServiceNow. Looks like the semiconductor infrastructure or materials and so forth are really moving. Cybersecurity, Arista Networks, it's working. Amazon's working. Looks like when I start seeing bad things about Amazon, the stock trades. All kidding aside, Meta's doing okay. All right.
Looks like energy is getting hit today after being the best performer last week.
Yeah. Well,
who's the one green dot in there?
So, yeah, we'll look at Google once we get through the request that's on the table. And then I'd like to look at Google. I wanted to see the charts that you're seeing and get your interpretation of them. All right. And then let me look at the index real quick. So what's going on, S&P? 0.47. That's not bad. It's a pretty solid day. And I think you and I were talking earlier. We have potentially a government shutdown looming, and that wouldn't be good for the economy. It wouldn't be good for healthcare. It wouldn't be good for businesses that do a lot of business with the U.S. government because their cash flow is going to be affected. If it's a short-term, shutdown, no big deal. If we get into a long shutdown, it's a deal because they're having to spend their own cash to keep things going. And I think government employees get sent home, right? A lot of them do.
Yeah.
So they're not making money. Having said that, the market's trading higher with that negative story coming out of Washington. So it's interesting to see that the market's kind of brushing that off and saying, oh, whatever, we're moving higher. All right. So
it's usually from a market perspective, it's usually a non-event. When you look back in retrospect, they're usually non-events, but they always capture the media when these events happen. And I think the poly market's actually above 50 that we will have a shutdown. And it wouldn't surprise me given the political environment at the moment.
75% chance. Yeah. Well, we'll see. I think you're right that the media jumps all over it, but just, it's like, what do I get from the U.S. government personally, right? It's not like, oh no, my garbage isn't being picked up, or oh no, there are, I can't think of any services that would be taken away from me personally. So I don't see it, feel it personally. So you're right that, hey, maybe it's being overstated by the media. Moving on from that, let's talk about Clear Secure, it's described as a software application company, and they're kind of put into the cyber space because they do security, and they also do security at the airports where you can subscribe to their service and have an expedited check-in process through security. And you can either do Clear Secure, or you can do TSA pre-check, which is what I've got, and then you can get in that line. I get what they do; it makes sense, and they continue to add airports. That looks good. Their margins are good; they're not great. They're like 62%. It's a small cap, 4.86 billion. Year to date, it's working. And this one here, I was following, and then I missed this move. And looks like June 16th, they started a really nice rise from 24 to 36. So that's about a 50% rise in stock price. That's really good. So it's doing what it's supposed to do in 2025. It's again a small cap with good revenue, PE 23. It actually pays a dividend, not bad. And it's fairly priced according to analysts. Continues to grow nicely. 20% growth rate is good. Consistent growth. And as mentioned, they've got like 62% gross margins. Cash flow is there. Looking at their forecast, some analysts believe that it could go higher, it could go lower, and it's really fairly priced if you look at consensus. Growth is going to continue, but as they get bigger, that growth number, flattens out. I would also say that, I think they've, their addressable market, it's close to being sold through, right? You have a certain number of travelers in the US. I think they're opening new airports, and they are competing with TSA PreCheck. And they're also competing with, maybe a person that only travels once a year. They're like, I don't want to pay for a subscription to check in early. I only travel once a year. So there wouldn't be a necessity for that traveler. Somebody that's traveling once a week, most definitely you would want to be either TSA PreCheck or have the Clear Secure service so you can get in and get on your aircraft that much quicker. So I think long-term growth is not going to be exciting. It's just going to be a slow grower at some point. They are going to be more profitable. That looks really good, the growth in profitability. All right. So these guys, when I look at their valuation, they are discounted. And I don't own the stock. Part of my reluctance is that I'm not overly excited about their business. It's like, okay, you're helping travelers check in at the airport. How durable is that business going to be? How, you're not going to grow at exciting rates. So I'm a little bit cautious with this stock, but to my own, demise, I guess, because the stock's done well over the last 3 months. So those that own it, congratulations. The last 3 months have been great. It is a discounted stock. I'm in other cyber stocks. And those are pure play software stocks, where this one's a little different. It's a service at the airport. They do security officially, but they're not a software company. Any thoughts on Clear Secure?
They've had a pretty nice run since June after trading sideways since November. They are trading, looks like the 20-day is rolling over a little bit, but the 50-day is still rising, and the 200-day, which had been declining since about the 27th of May, looks like it reached a bottom in middle of August and is now increasing. The RSI is sitting right at the midpoint, 53.18. The PPO looks pretty strong. And we did have a bearish crossover in bullish territory on the 22nd of September. And the accumulation looks like it is just shy of the 52-week high that was on the 19th of September. So it's still being accumulated, which is pretty positive based on all the moving averages and the money flow.
Yeah.
Might consolidate here for a bit, but it looks like the market wants to price it higher.
Excellent. So looks like Shadow Guy is on, and he brought up Mountain, and Mountain's really going up. Share my screen. Mountain's a new stock that IPO'd back in May 22nd. It isn't doing like what some IPOs have done, which is just scream up to a really high price. It's only up 14%. And more recently, last month is not all that great, but today it's having a very good day, up 5%, 5-day down 9%. These guys they're an ad tech company. So they are helping businesses spend their advertising dollars smarter so they can get better return on investment with their advertising. So now the one piece that I'm paying attention to is TV advertising. I mean, linear TV is like, man, it's going away fast. It's I watch sports on linear TV because everything else I could just stream, right? I don't even watch sitcoms anymore on linear TV because my schedule is busy like everybody else. And I can't commit to watching, like, I've seen two good new ideas for television. One of them is a show on the DMV. I think that's going to be funny. And then there's kind of I'm going to call it a spin-off on The Office, which is going to be called is it the newspaper or the paper? It's going to be a show on a newspaper, and newspapers have struggled. So this one's going to be kind of a similar kind of storyline to The Office. So I think those two shows are going to be interesting to watch, but I'm like, oh, I'll just stream them. So I'm not too sure if advertising on TV is all that great. All right. So they went public. So far, stock isn't oversold or overbought, excuse me. This business, $1.3 billion in market cap, forward P of 30. Wow. Analysts are really, really think very highly of this company, discounted by 74%. They are growing. They're small, but they're growing. Look at that growth. And these ad tech companies really, really grow. But the one concern I have is the latest quarter, June 30th, it had a lower percentage growth rate. That is a concern. Like, hey, what happened? It's Q2. You got to grow. You don't grow, it's not going to be good for your stock price. So that is a concern. Why did the growth slow down so much in that quarter? The big player in this space is AppLovin. AppLovin's doing great. Their growth is actually accelerating. So they're doing really well. Now, Mountain has very good margins, 73.8% gross margins. They're not quite profitable yet because they're small. They'll get there. If they continue to get bigger, that's going to turn to a positive number. And it looks like Mike is seeing a lawsuit out there. And free cash flow looks good, 22%. So these guys, the forecast, analysts think very highly of this business. One analyst has a price target of $39 per share. The lowest price target is $22. Wow. They think the company is going to keep growing and keep getting bigger. They're still going to be small, but they're getting bigger. So that's what they're basing their forecast on. And Mike's saying that there's a lawsuit out here on Mountain, and I'm not sure what that's all about. And I don't know that I have a valuation on these guys. What do the charts look like on Mountain?
We don't have much data yet.
Oh, that's right. They're an IPO.
Yeah, we have a 20-day moving average and a 50-day moving average. We don't have enough data for a 200-day moving average yet. But those two are declining. It's trading below both of those, and it's up today, but looks like yesterday was the lowest price we had seen since this IPO. The RSI is coming off a bottom and moving higher, but we are still in bearish territory, and the PPO has turned negative, and we even had a bearish crossover in bearish territory. Looks like the difference between the 12 and 26 is actually decreasing a bit today. We'll see how the price closes at the end of the day, whether that's confirmed or not. But it's a little early to start making any proclamations about a company this new.
Yeah, I'm careful with IPOs. They tend to have high stock prices and then sell off, and it's nice for me, I'd like to see a couple of earnings announcements confirm that, yeah, it is a good business. Like, they're growing, they're doing what they plan to do, versus some IPOs will, surprise to the negative, and boy, it'll sell off. So I try to avoid that type of risk. All right, so that is Mountain.
Sounds like
Check.
James Greaves is in a beautiful part of the nation.
Oh yeah.
It looks like maybe he's going on a sightseeing tour in Durango. Is that the case, James?
Well, I'm familiar with what he's doing. I haven't been to Durango, but I was north of Durango in a small town by the name of Ouray, Colorado,
Mm-hmm.
and I mountain biked the San Juan Mountains there. I think they refer to that. Do they call that the $1 million highway? Back when $1 million was a lot of money, and that's where they struck a lot of silver. In Durango, that whole area is spectacular. It's referred to as the little Switzerland of the United States because the mountains are so they're very steep. If you climb them, you realize how steep they are. And a lot of mining happened there, I guess, a couple 100 years ago, 150 years ago. And you could still come up to old mines if you like off-road uh, off-road adventures. Boy, they got a lot of adventure for you there in that part of the country. It is beautiful. In the summertime, it's freaking gorgeous. In the wintertime, if you like skiing, boy, they got good skiing for you. But I'm kind of I've gotten, as I get older, I don't like cold weather as much.
Yeah, me either.
I sit in my Southern California home and, wait out the winter. But I think Colorado's awesome. I named my older son, his middle name is named after the highest paved road in North America, which used to be called Mount Evans, and they changed the mountain to something else. But my high school buddy and I rode bicycles up to the top of that, and the top is at 14,052 feet.
Wow.
Yeah. The air's so thin, you don't need a drink or smoke anything to feel high. we were certainly feeling it on that ride. Well, have fun, James, and thanks for tuning in. And enjoy the beauty that is. What do they call? Do they call that the Four Corners area?
Yeah, we're getting pretty close to it.
Yeah, awesome. Then we got one more comment on Colorado. I smoke broccoli. Never been to Aspen. I've been to. Let's see where I've been in Colorado. I've been to Crested Butte, Breckenridge, Ouray, Grand Junction, Denver. Colorado Springs is beautiful, and Boulder is really, really nice, beautiful. Yeah, Colorado is a really pretty state.
Yeah.
All right. So we got to keep investing so we can take awesome trips at our leisure. Okay, so we left off on Mountain, and I think I skipped one, which was American Express. One of Warren Buffett's favorite companies. He's made so much money on it. And there's a comment here. You may know what he's talking about, but Ben 10 is saying he got out of American Express too early and looking like I'm attempting to double Dutch, trying to jump back in. Do you know if that's a term in trading?
I haven't heard it used in trading, but I think it's trying to find a discount.
Ah, okay. I know that, you know, when you're dating, you can go Dutch, which means each person pays for their own meal.
Yeah.
I heard that. Okay. Well, good luck. Good luck, Ben. American Express is how are they doing? Geez, man, this company, I have a bias against them because I'm like, well, I use Visa and I use my American Express for business. And these guys just keep performing great. And Warren Buffett continues to look like he knows what he's doing because he has a big position in American Express. And these guys are just killing it. 244 over the last 5 years. That is excellent performance. And they pay a dividend. The dividend is small, but investors shouldn't complain because they're like, yeah, I'm sitting on a huge gain. And the dividend keeps getting smaller because the stock price keeps getting going higher. So not a bad situation for investors. They're growing. Look at that growth. Good, solid growth. And it makes me feel even worse knowing that, you know, I didn't like American Express. I liked PayPal, and PayPal's been a dog. So congratulations to those that have invested in American Express. I should have followed the Oracle from Omaha, Warren Buffett, on this one. And these guys just crank out the cash flow. They do well. I mean, it's a network, and they just keep making money off the network.
We talked about them a couple of weeks ago in the scandal they were involved in the 1960s. And I said it had something to do with mixing oil and water. And I couldn't remember all the details, but I just did a Gemini search, and that's exactly what it was. It was called the salad oil scandal. So they were doing some loans to some gentleman who was fraudulently obtaining loans by using non-existent salad oil as collateral. He deceived inspectors by filling large storage tanks, mostly with water, and then adding a thin layer on top of the oil. So that's how American Express got sucked into that scandal back in the 60s.
Wow. Okay. Well, speaking of salads and oil, I like mixing my olive oil with balsamic vinegar.
Oh, me too.
Just as a side note, and having a good salad, some good fresh bread.
You buy your balsamic from Trader Joe's?
I do, but we have an Italian market near our home, and this place is, you know, obviously you can go to Italy and get the real deal. You can go to the Northeast and probably have better choices. But for Southern California, this market is the real deal. And they have really good balsamic vinegar choices there and really good olive oil choices there. But, you know, like anything, the best olive oil deal you'll find is at Costco. You can
There's
get
that one brand that my wife picks up from Trader Joe's. I can drink that balsamic vinegar, man. It is absolutely delicious.
yeah,
It's just incredible.
good stuff. Good stuff. All right. So got through American Express. Well, let's go ahead and land the plane talking about Alphabet. So Alphabet is up 0.87. They were up a little higher earlier. It's had a very nice run for the last couple of months. And especially this past month, they've had a good month, really a nice 45, 60 days where I think some of the stories around, hey, is AI going to be a threat? And is Department of Justice going to be a threat? And Department of Justice went away, and now AI is looking like a real good opportunity, because the Gemini app is the #1 downloaded app on the App Store, the Apple App Store. So it's like, oh, hey, look at that. Google Alphabet's #1 in one more category. Good for them.
You saw me using Gemini right from the Chrome
Yeah.
browser.
Yeah. And I've been using it more and more. I think it's going to be speaking from my home, I've got a 21-year-old that thinks ChatGPT is everything going forward. And we have these fun discussions around it. So he takes the ChatGPT side and I take the other side. So it makes for an interesting conversation. All right, back to Google Alphabet. So these guys are knocking on the door of 3 trillion. Excellent. That's awesome. And the PE ratio is still rational at 26, moving to 25 next year. They really don't pay a dividend. They just check the box. So I think some institutional investors could buy Google. And they are a good growing business that is massive in scale. $371 billion of revenue. Their margins are good. Cash flows are good. I continue to see that Google is discounted. And for me, the Google, the stock, when I invest in a company, an important decision is qualitatively believing in the business, understanding, is that business strong? Is it a desirable business? Are they #1 in their markets? Do they have a moat? All those things are very important, and they're qualitative decisions or qualitative analysis. And when I take that approach, Google always comes up as like a gold standard. Like, this is what you want in a business. It's like beautiful. So that's where I always start with Google. And their discount right now is 11%. It may not seem like a ton, like a big discount, but that's because, hey, first, their stock's been moving higher. But second, if I didn't own so much Google Alphabet as I do today, because it's the second most valuable stock in my portfolio, it's where I have invested more capital into Google Alphabet than any other stock in my portfolio. Meta's valued more because Meta's appreciated faster. If I didn't own that much, I'd buy more Google at 11% discount. It's just that important. I'm buying Amazon, similar discount. I'm buying it because I don't own enough of it. I want it to be another pillar in my portfolio. Google Alphabet's a pillar. Meta's a pillar. Uber's a pillar. And, I want Amazon to come into the picture and be a pillar of my portfolio. I would consider like others like Chevron and even Kroger to be a pillar, because those really show up when everything else is down. So Google Alphabet has been really working, and it's a stock that very recently the market really dangled a nice discount on a very, very good business. And what do you think of Google?
So I was looking where it sits on the FactSet expectations for the next year, and it's actually comm services is kind of at the bottom.
Huh.
I'm thinking that Apple is probably gonna, or not Apple, Google is going to buck that trend a little bit, because they're still very strong. They're above their 20-day, 50-day, and 200-day, which are all rising and in the proper order. They had been overbought for 3 weeks out of September after the announcement of the litigation against them. They did top out and had a small pullback, but they had a hammer candle right here and did reverse that pattern and are moving back into overbought territory. PPO is still very strong. We did have a bearish crossover in bullish territory. The accumulation is near 1-year highs. The money flow is still very strong. So I'm still bullish on Google.
Looks good. Looks good. Other than at a very high level, the communication services space is going to underperform other spaces. But let's move on to a tiny cap, and then we will, I think, shut it down because we had a request come in. Fallsgrave wanted to look at gambling.com. And gambling.com, football season started, and it's been a good season. It's been already interesting to see some teams do well and other teams flounder. And this is a company that does marketing and sports data. And I mean, they don't take any bets. It's not like, hey, you can go on gambling.com and place a bet on, I think we're going to have Monday Night Football tonight. No, that's not what they do. They actually have information for people that do want to either gamble or go. They are competing in a fantasy football league or fantasy baseball. Baseball is going into the World Series, or excuse me, the playoffs, which will end up in the World Series. You got all kinds of sports coming at us, right? You got international football. World Cup's going to happen next year. I mean, you got a lot of things happening. So these guys, they provide data and marketing. And a lot of the advertisers on gambling.com are the companies where you could place bets and so forth. So when I look at this particular stock, and it's a small cap, 291 million revenues, you're paying 2 times revenue, and you're buying a company that's profitable. Analysts think it's a strong buy. I don't know how many analysts are covering it. The stock is sold off this year, 42%, 18%. And I forgot, where are these guys headquartered? So these guys are headquartered in Jersey. Is that in the UK? Is there a country by the name of Jersey, or is that part of the UK?
That's a good question.
I know New Jersey, so I'm guessing that, hey, that's what they named New Jersey after. So looking at their growth, this is really good growth, 27%. It's a small company, but they're growing, and they have good margins. Free cash flow. Look at these gross margins. They're not taking any bets. They're just bettors or sports enthusiasts, fantasy sports players. They want that edge. They want to do their research, and they're doing it on gambling.com. They're profitable. So this one here is market hasn't paid attention to these guys. They're so small. How long they've been around? Looks like they IPO'd in 2021. And boy, their stock price really went up. So this one here, I've got a small position in this company. I think they have the fundamentals that, over time, I have to think that either they'll be acquired or the market will start paying attention to them, because I think they're nicely discounted. They haven't moved much. And, a little voice inside my head was like, hey, as we approach football season, football, here in the US is king. Once it gets going, you got college football. I mean, you get a lot of eyeballs watching, and they are highly discounted. And I'm just going to sit tight with my little position. If it starts to move higher and really catch a rally, I might throw more capital into it. But for now, that's where I'm at with gambling. Any comments on gambling.com?
Yeah, it is in a downtrend. So once again, I would draw my trend lines just to see where I would need to see it break above before it reverses this downtrend. So it is trading below a decreasing 200-day moving average and a 50-day moving average. And all three averages are in the wrong order. They're in the reverse order that they should be. So I'd want to see it break above these prices and just before I could say that it's going to move up significantly. The RSI is 41, so it's in bearish territory. PPO is also in negative territory, and it looks like the positive momentum that it did have is starting to decrease. So we may have a crossover in these two averages pretty quickly. And the stock has definitely been in distribution since 14th of May. Money flow is negative also. Really shifted into negative territory on the 22nd of May.
Wow, yeah. It's all making sense. Yeah. Hopefully, when do they announce next? Let's see. They're going to announce on the 13th of November. So if they show a big spike in revenue, maybe that'll grab the market's attention. But if it doesn't, then it's just going to maybe be ignored. All right. Good stream. Thank you, sir. Nice job today.
Let me quickly share the economic reports out this week.
Go for it.
So some I'll be watching is home sales. The jobs report will be a big one to watch this week, and it happens before the government shutdown possibility at midnight on the 30th. So we should get that report. We have the ADP report on October 1st, and that should be released even if there is a government shutdown because this is a private company. And then on October the 2nd would be the initial jobless claims. This is in jeopardy if we have a shutdown along with continuing claims. This dropped quite a bit from the previous week, which was a really bullish signal for the economic environment.
Yep.
Jobless claims is also something that I've been watching closely. This is up about 200,000 from 2 or 3 years ago, but has been right around this level for a while. And then the big one could be a market moving event if it gets released because the government shutdown would be on the 3rd, and that's a non-farm payrolls and the unemployment rate.
Yeah, so we'll see how many reports we get this week. I guess the ADP report will have extra attention because if we're not going to get the other reports, the ADP reports, what we'll have to focus on. Yeah, and some people believe the ADP report is actually what they pay attention to because it shows like real data. ADP is a big payroll processor. They process the payroll to like a lot of businesses. So their data set is pretty legit. Now they don't process like farm stuff and things like that, but it's a pretty legit data set.
Yeah.
All right, perfect. So looks like the S&P is trying to hang on to its nice gain of 0.49. I'm good with that. Kind of right off into the sunset here for September with a big gain. I'm good with that. And we'll see how things flow this week. And good luck with that what was that video you're going to release again
I'll release it either today or tomorrow. That's on Hess Midstream. So
yeah,
if you're an income investor and have any interest in what's going on with them and their recent price drop, that might be an important video for you to tune into.
I'll be watching. Yeah. Thanks for the preview and thanks for the analysis today, Daryl.
You're welcome. Thank you for having me.
Hey, everybody. Thanks for tuning in. Good luck with your investments this week. Really appreciate all the different questions that came up and all the stocks. Just in case you're new to the channel, I respond to the member request, and you might notice that some names come up in a different color. If you're not a member and would like to look at a stock, it's just a $5 super chat, or you can become a member. And didn't mean to ignore anybody out there, but those are the kind of like the rules of engagement with the live stream. I posted at the beginning of the stream chat, as well as I posted it again. So just keep that in mind. Didn't mean to ignore you. We were just really busy. All right, everybody. Have a terrific day. And thanks again for tuning in.
Take care, everyone.